Good morning, everyone, and welcome to the Ankerstar Wealth Morning Show. I'm your host, Allison Ankerstar. Today we'll be talking about this morning's positive U.S. GDP number, Tesla's earnings, and Southwest Airlines earnings. But before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. The U.S. gross domestic product rose 2.9% in the fourth quarter. So why is everyone convinced there will be a recession?
Hey, good morning, everyone. Good morning, Allison. Sounds like you're a little bit under the weather this morning. That's no good and no fun for sure. But everybody out there, Allison made a couple different squares for our morning podcast here. So thank you for doing that. And just let us know which ones you like, right? We're going to run for about a week, maybe a week and a half with each, and then we're going to change a little bit until we maybe settle into a certain form. But yeah, let us know what you think out there. All right, let us get to Allison's question. If you're watching TV at all this morning, you saw that we had a well above expected increase of the gross domestic product. So what is that? For everybody's had Econ 101 in college, it is the overall, if you treat the country as a company, it's the overall gross domestic product. And as long as that's growing, that means that the country is growing. So what is all the recession talk? Well, historically, when we've raised rates, that leads to a recession. And last year in 2022, we raised rates at a pace that was really unbelievable. We had 4 consecutive 75 basis point rates. So do the math, that's 3% increase in interest rates. Housing was hit, the market was hit, pretty much, crypto was hit. Everything went down, right? So it was kind of one of those years, but out of that, economists continued to say, and historically this has been true, the yield curve inverted, if you understand the finer points of that. But when you raise the short-term rates, sometimes the short-term rates will outpace the longer-term rates, and then you have that inversion. And all of these things traditionally have pointed towards a recession. Now, I will say this, and that if you watch mainstream media, all you're going to hear is recession talk. Not if, but when, and not, how little, but how bad, right? So really painting a negative picture out there. But I will say this indicator has predicted the last 30 of 8 recessions, meaning it's an over-predictive case. It is 100% that when the yield curve inverts, that we have a recession. But that doesn't mean but the yield curve has inverted, and we've not had one before. But every time we've had a recession, if you back up, that has occurred. So it's a poor indicator, but people put a lot of faith into it. So therefore, even though the country's growing at 2.9%, everybody's still convinced we're going to have a recession. How do I interpret it? It's like I've said all along. I've been optimistic through this. It's not nearly as bad as it seems. The companies that are laying off people right now are laying off people to clean up their balance sheet. I don't really think the companies are facing the recession. They are bracing for the recession. Now, in an interesting turn of events, if enough people are convinced the recession's coming and they start laying off folks, we could actually create a recession when there wouldn't have been one anyway. But so far, I think all the tech firms that have going to do layoffs have done them. Apple has come out and said no layoffs. And we talked the other day about Tim Cook reducing his salary. McDermott from ServiceNow, which is one of our newest holdings, and I like it, up huge lately, was on CNBC this morning after beating earnings saying no layoffs from us. We're growing. So there's plenty of good news stories out there. And I think, when you relate this back to what the Fed's going to do, generally, good news has been bad news, meaning that the economy is still growing. Therefore, the Fed's going to continue to raise interest rates more than they would have normally. I don't think that's the case. I think we're going to lock into a 25 basis point interest rate hike at the next meeting next week. And from there, I think there's going to be talk of pausing. Right. So we're done. We're done with the pain. So to relate that to you and your investing, let's look at the NASDAQ composite. Here it is. This is a 1-year chart. So, 1-year change is minus 15%, but the year to date change is 9% already in this year. So if we flatline from here, the NASDAQ will have 9% up year. right? And you're like, well, yeah, that's why you don't sit out of the market, because this was a 9% move in less than a month. Well, if you're on the sidelines, you didn't get that, and we could end the year where we are right now, and you would have missed out on a stellar year. I think it's going to go higher. I think as soon as we pause, we're looking at another 10% up or so. So when you look historically, I was having this discussion yesterday with a client. When you look historically, you can look back in time and say, hey, when should I have been buying? Well, in these dips, right? We've had several of them. So feel free to buy here. And, there's a chance we go back down to new lows, but it sure doesn't look like it's shaping up that way. And the GDP number this morning gives a lot of support to the fact that the bottom is actually in.
Next, Tesla stock has been crushed in the past 6 months, but is up nicely from earnings last night. What's your take?
Yeah, so they released after the bell yesterday. Tesla is, it all comes down to what you think Tesla is as far as a company. If you think it's a car company, it's grossly overvalued. If you think it's a tech company, it's probably undervalued. Okay. A tech company that happens to spit out a couple million cars a year. So I think it's a car company. But certainly, left the let's get off of that screen. There we go. So weak margins, right? It's a car company. Car companies have razor thin margins, right? That's why their PE is generally below 10, right? They just can't make a lot of money, even when you're special, like Tesla was. Now it's back to, it's a car company and they're going to make a couple million cars, and therefore it's mainstream. You see them everywhere now, where it used to be that kind of unicorn running through the neighborhood. Now everybody's got one that wants one, for sure. The Tesla believers. But look, the stock's up 10%. So, big hats off to Elon Musk and his team for, producing a good quarter. However, look at what's going on here. He dumped a ton of stock. Obviously, he had to pay for Twitter. There it almost touched 100. It's up at 158. So, that's a 50% move in what, 3 weeks that's moved higher. So the year to date, 28%. So maybe my math is a little flawed there. But I mean, it's made a heck of a move up. So what's in the future? You tell me, right? So current PE 48, Ford PE 37. Ford's PE or GM's PE is down around 9. So if it's a car company, you're being silly with your money. If it is a tech firm, then I am dead wrong, and it's going to go back higher. So really, it's up to you on your take on Tesla. I've always said own the car, not the stock, but you have to do your own due diligence for making a decision on that.
Last, Southwest Airlines had a rough patch canceling thousands of flights over the holiday season. They missed earnings big this morning. What's next for the ticker LUV?
Well, nobody had a crappier Christmas than Southwest leadership, right? Obviously, we were caught up in that. We were, as a family of 4, going to go out to Anaheim for some pristine volleyball training. That got canceled. And Southwest did right by the, trying to make up for it. They refunded the money, and they, gave out some extra points and stuff. But does that really make up for it? No, not really, right? These are Christmases you can't get back, right? So we were inconvenienced. Other people had holidays ruined. I got that. But the CEO, so they lost what is it? 800 million on that flight disruption period. So, oh my word, they're off 5% today. But probably the worst part, so the fourth quarter, they lost alone in the fourth quarter, lost $220 million. Like, wow. But the worst part is the CEO was on CNBC this morning. And as CEO, you've had plenty of public affairs training. There's things you say and there's things you don't say. But he kept saying we are spending so much money on technology. And Jim Cramer ate his lunch. I mean, just ate his lunch, saying, what are you talking about? You're not spending nearly enough on technology. This whole thing has come down. It's going to be officially investigated. But on the surface, this whole thing is because Southwest hasn't updated their scheduling technology in like 20 plus years. And they end up canceling, 16,000 flights and ruining Christmas for people and becoming a meme airline. And he's like, and you're sitting here telling me that, pat yourself on the back, you're spending enough money on technology. So, wow, is all I can say. The CEO is certainly appears to be out of touch, at least with his interview. So anyhow, how's the stock doing? It's getting killed, and it should, right? It used to be a favorite of all the airlines. I've said don't invest in the airlines, but razor thin margins, they go bankrupt, that all these things, and they're a necessity for the country. Plus their pilots are on strike, and airline folks are pretty well paid, but they're also pretty good at making their case that there aren't enough of them and they deserve higher pay. So no matter where you fall in line with that, the Southwest folks have talked about striking in May, and the pilots are saying don't plan on any travel past May, that you can't expect to be canceled. Right. So it's like, that's a bold thing to say. But overall, the stock's getting hit. I wouldn't touch it. I wouldn't think about picking it up here on the bottom, if you will. They're still profitable. That'll switch obviously negative once this updates. So anyhow, it kind of throws everything out of whack for right now. But I would certainly stay away from the airlines altogether, but certainly, and more specifically, Southwest.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here tomorrow.